Brian, as we're seeing there, the leaders meeting in NATO, but we have seen an effect, as you mentioned, upon copper, upon oil, upon soft commodities, and it's the economic issues here.
Yeah, exactly. And so this is not a minor thing. Donald Trump, when he was at the NATO meeting, sent out a tweet about soybeans. So he's very aware of the economic conditions, but also of the political implications of what he's trying to do. Trump starts with bluster and then works his way back to accommodation. So I'm not sure how real these threats are, but we have to take them as real because of who he is and how unconventional he is. Especially disconcerting is they upped the tariff list last night from 35 billion to 200 billion. This looks like it's a real thing until it isn't. So we have to take it very, very seriously.
Yeah, as you're mentioning soybeans, tweets being sent to try and steady the nerves of farmers as soybeans currently trade off by 1.8%. Brian, I'm interested in gold because we're not seeing much of a haven trade there. We're off by 0.5%. So even as we see commodities sell off, stocks sell off, you would have usually seen gold move higher. But do you think this is more a fact of the dollar strength?
I think it is a dollar strength. So that's a great point you brought up because commodity markets, remember, supply, demand, and price. And the value of the dollar is something that we all have to keep very close track of because the Federal Reserve, remember, is talking about raising rates. Even Federal Reserve President here, Charlie Evans, is saying, yeah, he's a dove. Yeah, maybe we can raise rates. It's going to be okay a couple of times. So looks like there's going to be dollar strength. That's murder on emerging markets and especially troublesome for places like South Africa or Chile when they're trying to export copper in a market where oil prices are going up and their transportation costs are going up and the dollar's appreciating. So it gets very, very difficult in emerging markets. That's where we're going to see the pain focused in the short term. We don't know what the long-term implications are here, but remember, what we're talking about is tariffs and not embargoes. So what'll happen is there'll be good substitutions. The Chinese will buy Brazilian soybeans instead of U.S. soybeans, and then the basis will even out over time. So this is something that worked out over time. This isn't the end of global trade. There's just going to be some substitution caused by political risk, and that's what the market is trying to price in as we get through this uncertain political period.